Great and beautiful morning and evening to you all, wherever you are joining me at this hour. Welcome to 400 edition of Investdata Trading Academy live with Ambrose. Yes, the market across the globe is not really doing so fine this morning. I will say what I mean so fine. The market is still very much missed as to speak in the matured economy, as all eyes are still on what on data and the ones that are coming, interpreting this data, how it's influencing the market activities. These are the things that is playing out in this matured economy. Good thing is that as trader or investor, any domain or any market where you are playing, you must understand what is happening in that environment to guide you what make your informed investment decision. You must look at the numbers that are emerging from the economy, the ones that are emerging from what from the companies that are in that market, and also what is the sentiment of the people, the market players themselves. How are they reacting to these numbers? That will go a long way to help you as analyst or as investor to know exactly what to do per time. But I will tell you that in Asia, as we speak now, I think that Asia market also is looking on southward as we speak, and but some few markets in that domain are looking up. Like in Australia, we see market inching up, and that of India market looking up. But for China slowed down almost 2 weeks rally now because of what the news of property industry. That news came about one of the big name in industry have been also been sued for what for liquidation or have been filed for liquidation. These are the things shaping market in what in China. Despite the recent rate cut, also government moved to form of a intervention or to stimulate the economy. But stocks in that environment is also reacting to what the higher and longer interest rate cycle or of or rule for US. These are the things that's influencing this Asia market as we speak right now. But the good thing again is that in all this, there's always opportunity for investors in that environment to make money. You see Japan also pulling back for almost 34 years, 34 years high because of what the inflation figure that came that also that inch up again, pointing that there might be a reversal from this ultra dopis or what we call negative interest rate in Japan, and also that might change it because seeing their latest inflation figure inching up, it sends a signal, and also investors are looking at how the Bank of Japan will also be handling this in their next MPC meeting. But I told you earlier, we saw a pullback was in in Chinese market, China market, sorry. Yeah. But if you look at what also is happening in Europe market for me is, at this point it's also mixed, but all eyes also still on economic data that will shape that market. But I tell you, the market is a bit calm ahead of the key inflation data they are looking at, to see the market is weak right now. Despite the US market pulling back and that of Asia, but you can see that in Europe, I think that investors remain a bit missed and also missed in terms of the activities. While we're seeing that the market is ranging, remain very tight as investors await new inflation figure that also give more information this week, either Thursday or Friday. These are what is also about. The good thing that the market is calm, not pulling back as we see in the US and that of the world. Market is a bit mixed, but I tell you, the investor in that domain are calm, settled to see what the figure will look like also. And this is also a point where the outlook for rates, both for Europe and for US. That's why all the market players there of like say are also looking at to see the direction where they are heading to. For me, these are how to invest because when all these data come, you know how investors react to that. As we speak today, you can see that yesterday, after our own year down here in Nigeria, we saw how the market also reacted, even when towards the end of market trading. And this morning, that trend has continued to come to our market. We're still looking at what is happening, in the mature economy. But I believe that the numbers are also that emanated from these Europe companies are also supporting the market. We saw numbers from Vodafone also looking up. That also reported the market was also Aston Martins also number that came. These corporate sectors with performance also were seeing a good number that apart from the ones that came, we are seeing impressive number from this market. Despite the economy is slightly looking the way of exception, but the companies are not reflecting it yet. We are seeing a good numbers coming from company in that environment. But once again, that we can see that oil price drop today marginally, but good. I see that even the news of OPEC extending their great production cut is not impacting more. You saw it lifting the price yesterday, but today we're seeing a pulling back again because of expected data from US inventory, and who expect that US inventory should all over because US have talked about almost 6 new rig where they also kind of exploiting crude. For me, these are the figure that's also keeping the market despite the all that's going on in Middle East and that of what that of of Ukraine and Russia. Like I said, that U.S. market is also opening in the southward this hour. Looking at the data that's also emerging from that market, we can see that despite the safe force expected earnings in that market, is still looking the other way round on the southward direction, even with also looking at the GDP inflation figure as expected. All these are things shaping US market, but I believe at the end of the day, it is the coming their next MPC meeting will further give direction, but all are still playing around the World Sec are saying in different Fed are saying in different meetings where their members try to say that yes, that the time for rate cut is not yet. They need to look forward either in the next 2 months. These are the things shaping the market, and I tell you, it's not like the mature market. If information has a way for influencing activities, also direction decision of investors in this matured market, and that is what also happening in our market today. We are not left behind because of what transparent coming back to our market. And we are seeing it, as number is coming, market is adjusting because people play the market. They need all this information to work to guide their decision and also to project their portfolio or move from one sector or industry to the other on the strength of what information coming from the company, also coming from what from the government, especially when it comes to physical and monetary authority. Every investor will want to look at it to see how they can take advantage of information from these authorities to what to invest. And when it comes to monetary policy, it's all eyes are there. We expect that these economic data would also impact timing. Very, very important to know exactly when rate cut will happen this year. Even here in Nigeria, we are seeing an astronomical increase in rate cut. We also want to look at it briefly and impact which sector will this rate hike will also impact positively, and which sector will also going to have a negative hit from this rate hike. Yes, we know that anywhere in the world, rate hike will increase cost, but it's for a period of time, a short time, just to adjust the system and put in direction. But I don't know how we're going to manage it here in Nigeria because our own interest rate or our own inflation is not as a lot of liquidity push as we're trying to make us know it's more of structural issue. I believe that when the structural issue, the physical also come around to take off security. When we come to Nigeria market, we look at it holistically, and more will be on Saturday where we're having a Q&A section where we're sharing ideas, many analysts in the class, and also other professionals will also be sharing their view and how all of us also take advantage of the knowledge they're going to share to the kind of putting our portfolio ahead of the Q1 numbers, and also expected that government policy, how it's going to play out. The foreign investors were expecting to see how they're going to come in, because I tell you, if assets in Nigeria, if our currency is becoming it's being on daily basis, it make access in Nigeria cheaper, and that also impact the price at the end of the day if these foreign investors start coming into our market. We need to have this at the back of our mind. But say, I was saying before that US market is in red. I can still tell you that it's still there. Even like I mentioned, the property issue in China also also have an influence on the market. Oil price has slipped over to the downward side because of expected data from US inventory that put is going to be up. Yes, look at Africa market. Africa market is not it's not left behind. Still missed for I see that NGS is on the southward movement this morning, extending almost 3 days bearish sentiment that started on Monday. We've seen that after the MPC meeting yesterday, we saw our market reacted towards the end, and that trend has continued in our market as we speak. The good thing is that for those that understand how to play the market, these pullback are things that is part of market dynamics. For what you do that you as a trader investor, how will you take advantage of this this pullback? For those that has no cash in their account, and this opportunity for you to make money even on the short run, but for people that are going to take short position. But I'll tell you, as market is in correction mode now, all you guys look at where will the market get towards strong support level that has broken down already the 100,000 mark or sacred line again below now around the 9,000, no, no, 9,000, no, 9,000, 99,000, sorry, 771. Yes, this is the rate, the portion of the market now. We need to understand this so that we will know exactly what we should do next after this. It's very, very important. So that at the end of the day, we will know exactly what we should be doing, because it's good that investors understand what is happening in the market. Once you're able to understand what is happening in the market, you are good to go with it. But when you don't know, you will also be following the market to panic, and at the wrong time to be panicking out. Why, when we're supposed to panic out, we didn't do so because we don't have information. But now that market has remained in this mode, you don't know what you need to do. For those that followed our advice, that take profit and you have your cash now, this is the time for you to come back. Those stocks that you took profit, that you left some already in those accounts, as they put back now, you buy more. As you buy more at a cheaper price, you're going to get more volume, that you're going to earn more what, more dividend income from that same portfolio. And those that are taking advantage of those stocks that have plan of margin, those that have to win one primary market activities, as they come down now, because you have expectation, also the right time to start buying them. Even when you are bought at higher price, you can average them, because already you have an insight what these companies are going to do going to the future. That's why it's very, very important that you know all this, so that at the end of the day, you'll be in a better position. I tell you, no matter how down market is or how up market is, there's always opportunity. That is why I tell you that sector rotation will continue in our market. Why is it going to market? There are industries and the sector that will benefit from the rate hike. The rate hike in Nigeria, for me, this is the first time in the history of Central Bank of Nigeria or monetary policy sitting having to hike rate with almost 400 basic points for just a meeting. Yes, it is true that for the past 8 months we have not had no meeting to put adjust rate, but coming at once with this, they ask a way of what affecting the economy. The economy is already moving on a slow pace with this. It's going to lead to what, contraction. Why contraction? Because high cost of funds going to slow down business, and also those business also, if you're not able to pay their loans, or not able to pay, or unable to access loan because of high cost of funds, it's going to affect their business, and that business is going to also lead to what, unemployment and other stuff. That's why we don't really know what is they want to achieve. We understand that yes, inflation is at almost a 28 years high of almost 30%, 29.9. We agree, and also we are seeing that know that GDP for last quarter for 2023, yes, it came out positive, but I can tell you that growth is still very fragile. That if we use what we are seeing now because of high interest rate and also volatility in the FX market, just to keep it, I think we're going to complicate things for the economy. That's why the team also, I know that since they have another NPC meeting before the end of March again, which is next month, they will see how the economy is going to react. The market is going to change the dynamics of the whole thing before they know what to take. But I tell you, this will push a lot of businesses out of business. Why? Because of cost of funds, and also because I said it's going to favor the banking sector. The banking sector, yes, why is it going to favor? Because when there is rate hike like this, where do you see people play more? Is those that are a pension fund, insurance, and other investment banking. All of them will take advantage of what rate hikes were to make money. But also the banks, the major source of the banking money is creating for credit through loan. But if the banks know that yes, when they increase their loan out because of this high rate, the non-performing loan will increase, the rate will increase, and for that, so bank may that okay with their risk management to hold their money and not giving it, and that's also going to affect the economy. And at the same time, contraction will be there because there's no business activities. That's why the market going forward, especially for the month of March, we're going to see that our purchasing manager index might likely to slow down because of cost of funds, plus inflation, and low purchasing power of Nigeria. Most people that are into production, most of their goods will be on the shelf. That has a way of also affecting their cycle of business. I think these are the things that investors will look at. That means if you are not positioned in any stock, even when you're taking advantage of pullback in price, to buy into them, look at the sector where they're operating, go into the future, what to impact their price. Because if earnings feed on price, and we're seeing that the earnings that came recently from Nestle has also shows the same thing we're seeing the same thing we're seeing in this we're seeing in Nigeria Brewery was also seen in Nestle. Nestle has the result, and there is no dividend, no declare because of what FS woe. It tells you that this trend might likely continue for those in that those companies in that sector, apart from few of them that may also may likely one word or the other, you know. So these are the things that we see that has a way of because it has a way of shaping investors' sentiment. These have a way that market also have to factor into their decision. This is why you can see that I've seen it in this class for a long time. I've been saying in this class for a long time that we have to do portfolio reshuffling and realignment, moving toward though away from this microfinance sector, but we know that the economy is not friendly towards them in terms of because of what FS issue. This FS issue has really impacted them negatively, and now we are seeing the results coming. We're going to confirm what we have known already. We have seen their Q1, their Q2 and Q3, where we saw these losses manifest. Even as at Q3, we are seeing that most of them are having a negative shareholders fund. But if we are not surprised that they are declaring no dividend. We saw Nigeria Brewery came with their result, no dividend, and that of Nestle also, in their result I've seen if there's no dividend declared, unless they're going to announce it later, say no interim or final was declared for 2023. Against in 2022 there was interim of what? Interim of 25 and final of what? Of final of 36 naira 50 kobo. But for 2023, no interim of right. You can see this is going to send sort of sentiment to the market, negative sentiment to the market, and going to rub up on many of them, and many of the company in that sector. This is how market operates. That you can see that at any time you must know where to put your money. That is why you must invest and open your eyes. Don't invest and go and sleep. You must follow the trend. The market, the market watchers will always be saying what is happening in the market. Just like what to do in Investdata through our different fora. They just explain what is happening in the market to guide the investor on what to do because of what market can change at any given time. It's one thing now to have at the back of our mind. If you look at the market, as we speak now, market is down to 99,551.02, down by 1,031.87, almost negative 1% as we speak. Now, if I look at also the market bread is purely negative. We're having about almost 35 stocks in the red and just about four in the green. Now it has dropped from before it was four to speak now about just two stocks in green, Omatech and Mansard are the one in green. But on the loser chart, it has gone beyond 35 I mentioned earlier, almost 37 now. You can see from what I'm seeing. And also if you look at the activity chart, we are seeing that yes, Transcorp trying to resist decline, goes at macro as 12 naira 46 back again to 13 naira, traded about 31.9 million shares as we speak now. While Access Corp traded about 17.45 17 naira 45 kobo, traded by 20 million shares as we speak. Zenith Bank touched as low as 31, back now to 32.45 after touching 32.70, traded by 16.8 million shares so far. And Japan Gold has gone low at 2 naira 3 kobo, that's 15.9%, 3.9 million shares as we speak. UBA is flat now at 20.75 and traded 14.6 million shares. This is the state of the market, but I tell you there's no cause for alarm. Why there's no cause for alarm? We expect that this is going to happen. It's not something that is taking the market unaware. It's expected, and I've been saying it that let's look at what's going on, because we are giving us signal since November last year that this new MPC, new governor and the team are likely to hike it, but nobody kind of predicted that to be at this magnitude of almost from 18.75 to 22.75. Yes, the market has to move with it and also adjust. Like I said earlier, look forward to see what will happen in the coming days. Yeah, coming to the chart now, look at what the chart is saying. Why I leave this line chart to see clear where the market is. I can see that this was what we call the supply zone of the market. That market struggle at this point. When supply is going to get here, first time, second time, third time, try to break out, it didn't last, it came down. But as the market is already moving on a downward trend, you can see that there's a clear change in trend and momentum in the market as to speak. But what the good thing is that as market go lower down, it gather momentum, then when it rebound, and it rebound from what it change either in policies of the government, and also when news that are positive also come. At the same time, on company performance. That is why you must look at which sector, which industry, which company you expect to see a better performance that are going to drive their price or sustain their price, going to the future. It's very key because every investment is against what? Against the future. That's why it's very important. I don't want to show that you can see the trend before I change this one to what? To a candlestick. Yes, you can see that where the market is now. Yeah. After yesterday, you can see that there's a little gap between here and here. The market has gone below what? The strong support level have been broken down as we speak now. And that because they are broken down, we are going to look for another support level again before you start taking your position. Because already this place have been taken off, at the market now yesterday, at the end of market yesterday. You can see even at this hour, you can see that the market has gone below it. It says that a new downtrend has been confirmed. That before market has been on what we call a distribution phase, because there is also consolidation range, but can now that confirm a what a markdown or a decline phase of the market. But we want to look at this on different time frame. But let's quickly call up our indicators. Yeah, because of our time. So let's make it snappy. So that you can see that market is far now below the T line. But like I told you that when you see that market is far below the T line, it's also a sign that it will find back to the T line. It's just like when it's above the T line, the more it go far from T line, the more you see market trying to come back to the T line. Now, if you don't want to go down again, you also want to come back. That is why once you see market below the T line, it said that the momentum have changed and the market is likely to go down, and that is what we're seeing. We are not surprised seeing what is happening. Like I said earlier, we are not surprised because the only thing that we are just saying that the rate of change that we saw on the MPR is only what that we were surprised. For others, they expected that market will react this way. But the good news out there for the investors is that you don't need to panic much because at the season we are now, as these stocks are pulling back, these prices they are pulling back to the range that the dividend can start making meaning that also attract fresh funds to come and partake in that dividend. That is why as it pulling back now, those that are dividend income take advantage of what those stocks that have that potential to start buying into them. Yeah. And also you can see now as the market is going down, we're seeing that the money flow is also going up. You can see there's what called a divergent at this point, which you want to watch. But you can see that MACD is also looking down. After trying to go up, you can start looking down again. You must keep your eyes on all this. These are very important things that you should also know when it comes to what investing. Yeah, it's very important. Keeping that you should also understand. It's not just to buy stock. Once you understand the direction of the market, the face of the market, you know what to apply the technical analysis or strategy to apply at any given time because it's going to give you insight to what to do next. This is the state of the market now, as I said, but on a day chart. But if you look at 1 hour chart, what are we seeing on 1 hour chart is very important. The same pattern play out that on the 1 hour chart, the market is still below the T line, and we're seeing that MACD is become what bearish. Our money flow is already at almost down. So that the momentum here, the market at what you can see on a 1 hour chart. I see that it's flat here. But on the day chart, it seems the market is falling about. That's why I look at other other time frames to know exactly what is happening. Then also go back to see what is happening in 4 hour chart. These are the things I use most. The 4 hour chart is having the same pattern, the general market. I see that money flow is looking up, but we're having insight already from what from 1 hour chart that the market, the funds is not entering the market as we speak. You can already see it also on the live chart that we're seeing more sellers than buyers as we speak right away. These are the things that we also watch when we're trading anytime, especially if you are trading live in the market. Yes, there's no cost looking at other stocks apart from let's say how far this Massad will go. If there's more strength in Massad for others, we are waiting to see where they are going to stop before we start jumping in them. But let's say Massad that some only the stock about what is happening there. But if you look at Massad time what's called chart now, you can see that it's still below the T line, and this 4 hours chart. And you can see that money flow is looking up on that stock, and also you can see that MACD is still also bearish. But let's see, you can see slight green here. You can see it for the stock. But let's go back to 1 hour chart and see what is happening in the stock. Yes, it just inch up. You can see this here, the candlestick here is still very small. You can see that the stock on the 1 hour is still bearish. Money flow is also very low at most 12. For me, let's see how far it will go. But I believe once we start seeing the dividend declaration, the final full year earnings for 2023, that also have a way of supporting the market. On this note, I will say thank you for your time. We look forward to see you again on Friday. But I'll tell you, there's no cause for alarm again. And so people understand what I mean by that. You don't need to panic sell your position now. You don't need to panic sell because of others are saying no. By now you should have known what to do, because if you are following us, I've been saying this. Like me, I'm not panicking that the market is at all, because I'm prepared for it. The pullback is an opportunity to buy into the dip and take advantage of it for my dividend income. Then we'll now start expecting to see what the first quarter. And that is why for those that are that are following us on the all the platform, the master class is coming on the 30th of March. Why 30th of March? Because we want to take advantage of what's going to happen in the first month of the second half of the year. How are you going to take advantage of that? Join us at the coming master class. There, the stocks to buy also will be made available, and the area of making 100% has gone. Like the first quarter master class, we have two stocks that will give that make 100%. We're not going to give you stock that will give you, but stock that will make me to make money, that will beat what inflation is doing, and at the same time, what the extra interest beat the MPR also. Why? Because you must stay ahead of inflation to say you are making money. If all your returns, in physical market still remain below inflation, I will tell you are seeing negative return. But for those that will attend the master class, we don't have issue. We already start putting things together that will guide us on what to do and the kind of stock we should also be investing for what for the second half, for the second quarter of the year, going to the second half of the year. Because at the end of Q2, we already crossed into the second half, and I believe as things change, we also guide you what to do at the right time. On this note, I'll say see you on Friday. Enjoy the rest of your trading day.